What does the latest economic data show and could indicate in terms of market action up ahead? How will the Fed respond to latest economic data, and how will this all play out for Bitcoin and stocks and specific trades that Gareth Soloway is here to break down for us? Gareth Soloway is the Chief Market Strategist at InTheMoneyStocks.com and also the President of Verified Investing Education. Welcome back, Gareth. Always good to see you.
So good to be back, David. Thank you for having me.
Thank you for joining us, even though you're traveling. I appreciate it. Your time is always valuable, as are your insights, which we will get today. Let's start with jobs numbers. So good jobs numbers on paper. Non-farm payrolls increased by 209,000. It is a smaller advance, but nonetheless, the job market is showing resilience. The stock markets are up this morning. The S&P 500 is up about 60 basis points. The NASDAQ is up about 0.9%. I'm looking at the charts right now. And Bitcoin, which we'll talk about, is kind of flat on the day so far. How do you think the markets, or why do you think the markets are reacting the way they are to today's jobs report?
Yeah, so yesterday we saw an ADP private sector number that was really strong, close to 500,000, and the markets freaked out. They thought that, oh my goodness, this could mean the non-farm payrolls is going to be really, really hot. Does the Federal Reserve need to hike even more than two times in the remainder portion of the year? And so we saw a sell-off yesterday, and today's jobs number came in just slightly under expectations, which kind of calmed those nerves. So I think that, again, gives the investor the green light to say, okay, the Fed may still hike a little bit more, but there's probably, if the jobs numbers are getting a little bit weaker, maybe there's not incentive or the want by the Federal Reserve to continue to hike much more past that. So I think it essentially opens a light at the end of the tunnel.
Under consensus expectations was the key. Now, the unemployment rate fell to 3.6%. It was slightly down from 3.7% the month before. Now, on the surface, we have to dig in a little bit deeper into the components of the unemployment rate, but on the surface, that seems to be an improvement in the labor market. Would that be bad news for the markets?
Yeah, so I think the headline number is what's driving the retail crowd. And interestingly enough, early in the day, we did see the markets down a little bit. And I always look at the early action in the stock market as being institutional, right? That's when the most volume is present so that they can make their trades. And so I think, again, the institutions are playing it a little more carefully here, where they kind of sold into this little bit of a move here. And now that they're done for the day, it's a Friday in the middle of summer. I mean, every big institutional trader's already gone for the day at this point by midday on a Friday. I think the small investor bids the market up. And the question is, how much higher do we go? I actually think that the jobs numbers at this point are making a turn. We've seen the unemployment numbers or the filings for unemployment start to spike up a little bit over the last few weeks or so. And I think that's a new trend that's starting. So I expect the jobs numbers to continue to get weaker.
Yeah, you're right. Initial claims did go up in the last 2 weeks. So certainly the futures markets aren't expecting the Fed to change course after today's numbers. In fact, the probability of a July hike is up to 92%. So yeah. Whether or not this is going to actually, if you listen to Jerome Powell, he indicated 2 more rate hikes. So not just once in July, but another one. And he said it's possible, although not confirmed. He's not taking the possibility of 2 consecutive rate hikes off the table. Yet stock markets are still up. Why is that?
Yeah, so I think there's this overall feeling that nothing can take us down, and there's some songs that mimic that and kind of talk about that. But when you get this momentum in a summer when the volume is light, it tends to be a mob mentality, and I think the markets continue to float up until something cracks or breaks. And I think, again, the labor market at 206, was it, or 2 something like that, was a little bit better than expectations, but by no means was it a bad number? And I think that's the key. As long as it's kind of this Goldilocks, the market can continue to float.
Right. Okay, so let's turn to Bitcoin. Actually, we're going to come back to the stock markets in just a bit, but a lot of people will want to know your updates on Bitcoin. Last time we spoke about a month ago, Bitcoin was just inching up towards 30,000. I think you told me that once Bitcoin maintains the $30,000 level for a number of days, I think 5 days minimum was your expectation.
30,500, then we could start. Yes.
30,500 for at least 5 days. Then we can start to see some moves. Is that have we met that criteria yet?
No, and that's the amazing thing about it. So these calculations and figuring this out go to charting and go to many technical things. And the level I've always said is 30,500. That's the key level. You have to have 5 trading day closes above that level in consecutive days. And if you look here, we've even pierced 31,000 multiple times, yet we have not had 5 consecutive days above 30,500. So that continues to be the line in the sand. And you're right. This is what we were talking about a month or so ago when we last talked, and we still have not been able to do it. So for me, I'm looking at this 30,000 low where we've been going sideways now for about 2 to 3 weeks, and the $31,000 high. And we're basically staying within this range, $1,000 range. And I'm looking to see which way does it break. If we break below 30,000 on a daily closing basis, I think the market could be in trouble for Bitcoin. We could see a drop down to, let's say, 26,000 or 28,000. If we can break above 31 and again hold above 30,500 for 5 consecutive days, you should head to about 35,000 on Bitcoin.
Okay. Now, I'm just curious as to how you derived 30,500. There must be some logic there. Why not 31,000? Why not 30,000? It's a very specific number.
Yeah, so the level goes all the way back here, right? So you have to go back all the way to the cycle, the bear market or the bull market cycle of 2021, and it's connecting as many pivot points to the daily closes as possible. And again, that's what the line kind of comes out to be. So right at that 30,500 on a closing basis for 5 days, 31,000 would be a good breakup again if we got to close above that. But yeah, it comes into just technicals and just finding these chart levels. And it's amazing how a lot of people talk smack about technical analysis, but again, we can see how this level just is a level. I mean, no one's listening to me. I mean, maybe a few people are, but overall, this is big money kind of controlling this level here on a technical basis, and it shows right here.
I think a lot of people are listening to you, which as indicated by the popularity of our interviews, Gareth. But I'm curious as to why Bitcoin has not yet breached $30,000 and maintained that momentum. There must be a key psychological resistance around the 30,000 number. Why is that, you think?
The number one, it's the even number of 30,000. So when you go from the 20s to the 30s, there's going to be some sort of factor where people who held all the way down to 15,700, there are people now that are getting back to these cycle levels that were major on the last cycle that are saying, all right, I'm getting a little nervous here. They're more likely to sell. There's also other people that bought at 15,700, 16,000, and now they're up a full 100%. And we know that even numbers tend psychologically to make people say, okay, listen, I'm up 100%. I'm going to sell and take some profits. So there's multiple psychological factors going on here, technical levels, psychological. And it is amazing to watch how the market has struggled at this 30,000, 31,000 level.
Do you think we're going to talk about the stock markets in more detail, but do you think the S&P 500 has key psychological levels that are close right now?
And there's no doubt about it, right? The S&P 500, the obvious one would be the all-time high, right? If we just go up to that all-time high, but there are technical levels that on a psychological basis play out. And in fact, let me show my screen here. Looking at the technicals of the S&P, and there's this trend line that has been major going all the way back to the COVID low. And what we can see here is on this first major downshift, we came right into it. And if I zoom in, you guys can see how it kind of played right there with that level, bounced off, came back, hit it again, then broke below it. And then look at how the underbelly of that level kept on hitting. And sure enough, right over here, we can clearly see that right there, that's where this market has run into pressure.
The reason I bring that up is because correct me if I'm wrong, but just looking at the way the markets have behaved, it doesn't seem like the stock markets have reached their key psychological ceiling yet, because the NASDAQ has continued to grind higher. And in fact, you and I spoke about this recently on one of your spaces. Everyone should check out Gareth's spaces, by the way. We'll put a link in the description down below. But you and I spoke about this, which is the divergence between Bitcoin and the NASDAQ. Historically, they've been correlated. In the last 3 months, the correlation has somewhat waned. And it's interesting how stocks have continued to grind higher while Bitcoin has stayed flat-ish. Now, do you think that's because of specific stocks that are just going up for specific company reasons, pushing up the entire index? Or do you think Bitcoin is just underperforming for other reasons?
Well, I think Bitcoin it's a little of both, right? So you have the AI narrative with stocks like Nvidia and so many other companies. I mean, you could go back in a lot of the conference calls from last quarter and check how many times AI was mentioned, and there's a correlation to how high the stock has run based on how many times it was mentioned in the conference call. So there's a lot of things like that going on where you have the momentum driven. I do think there was a lot of money on the sidelines. Again, the light volume summer months are generally months that can be driven by the retail crowd. And so you're seeing a lot of money that was sitting on the sidelines come in. And I think on the other side, you have Bitcoin where, yes, we're starting to get some clarity for Bitcoin alone. We see Bitcoin dominance pushing up above that 50% level, and the BlackRock news, the Fidelity news on a spot ETF. So it's positive. It's just still kind of a question mark. So I think that's where you're struggling on Bitcoin at this point. By the way, I also think that you have to look at the M2 money supply. You have to look at how much liquidity is in the market. Liquidity keeps dropping off in the entire system, not just the stock market. Stock market is one thing. People are still willing to chase, but M2 supply has really fallen down here. And there's a correlation between M2 and what risk assets do. You're seeing this kind of opening. And I know Ben Cowan and I have discussed this quite a bit in the no shill zone. You have this M2 and stock market diverging. And what that does, folks, is it tells you that at some point that mouth has to snap shut, whether it's M2 rising to meet the market or the market's falling to meet M2.
Ben Cowan has also discussed, no doubt he's discussed this with you, the concept of Bitcoin dominance. The dominance has been rising. It's at 52%, I think, last I checked. And so I think his narrative is that, or his explanation is that a lot of money has been bleeding out of altcoins into Bitcoin. Is that something you've observed?
Yeah, there's no doubt about it, right? So we know we don't know any of the security classifications now that have to do with what the securities of crypto will be. And I think that's just keeping so much. I mean, I can't find any big funds or big institutional money or major money that's buying altcoins right now. I can find ones that are buying Bitcoin. So that's the difference maker right there. And I still think Bitcoin dominance based on the chart. It's interesting because he uses different metrics than I, but both our metrics show Bitcoin dominance going to about 58%.
What does that mean in terms of price? Does that mean the rest of the altcoins will continue to just collapse, or do you think Bitcoin will rise a lot and then everything else just stays flat?
That's the question, right? So there's the two scenarios are Bitcoin falls a little, the altcoins fall a lot, or Bitcoin rises a lot and alts rise less. And so either way, this just kind of continues to impress upon investors that probably the place to be if you're holding for the next 6 months is in Bitcoin, 12 months. If you're playing quick little trades, obviously alts can outperform, but for the midterm, it's probably Bitcoin is your best play in terms of return.
It's interesting because if you look at Bitcoin's price action over the last 6-7 months, I mean, yes, $30,000, around the $30,000 mark is not anywhere near its all-time highest, but it's gone up almost like you pointed out, 80%, 90% since its lows last year. That's a big move, Gareth. I wonder why the altcoins haven't outperformed Bitcoin during this bull run upward. We're seeing the reverse happen.
Yeah, and that usually happens, right? You have a risk-on environment, and the alts usually go nuts. But you know what?
Exactly.
The alts are seeing this major kind of infusion or of fear from the SEC, right? So that's really what's going on here. Is like the SEC has now made it so that you don't know if an alt is worth 10% of what it is currently, or if it's worth 10x of what it is right now. And so without clarity, it just keeps so much money on the sidelines. But I'll tell you one thing, and I've said this to so many people, that if we get clarity with the alts, like let's say they come out with rules for these altcoins that are securities and we can see clearly, then we can value them. And you might find that like a Polygon or a Cardano is maybe valued way too low right now. The other side of the coin is it could be the opposite too. And that's what we just don't know as investors.
It's just fascinating to me because 2 years ago when we were speaking about this very issue, the narrative then was, if you want to know where the alts are going, just pick a direction for Bitcoin, stick with that, and then whatever direction that is, the alts will move in the same direction except with a higher beta. Now that doesn't seem to be the case. We have to deal with the SEC and legal issues and consider all that. So let's talk about Bitcoin, finish up on Bitcoin. $30,000, that's the range. Everyone wants to know what's going to make that range break out.
Yeah. So the breakout, if you're looking for what that could be, it could be a approval of a Bitcoin ETF. It could be the stock market continues to rally and risk on continues here, in which case eventually you would assume risk on means Bitcoin heads up as well. So those would be the positives that investors should look for. The negatives, which I think there's more negatives out there. If you see the stock market topping out, let's say the stock market even has a 10% correction from this massive run we've been on over the last, since October of 2020. If that starts to panic investors, do we see exiting and a breakdown on Bitcoin? So for me, it's watching this range. Obviously, it's a very tight range, and whichever way it breaks, I would go in that direction in the short term.
I'm just thinking if the capital bleeds from the alts into Bitcoin, could it also bleed from the stocks into Bitcoin? Meaning, if let's say in your example, if the S&P goes down, let's say 10%, would that 10% partly go into Bitcoin and push the price up?
It's always possible, but I don't think Bitcoin has matured enough yet to be a risk on asset yet. So again, I think that's the key, is that or a risk off asset. And so I think at this stage, if fear hits the overall market, and we've even seen this during COVID, even gold early on in COVID sold off, and that's like the classic risk off asset. And so I do think that right now investors should assume if you have a stock market sell off, you'd also get Bitcoin to come in a little bit.
So bottom line for Bitcoin, it hasn't sustained 30,500 for 5 days yet.
Right, 30,000 for 5 consecutive days. And I think also just take a look at this. I mean, we were on April 14th, Bitcoin hit 31,000. That was April 14th. We're now at July 7th. And think about what the NASDAQ has done. The NASDAQ has continued to go up, at least 5-6% since then, maybe even 7 or 8%. Yet Bitcoin has not been able to break up. That's concerning for me as an investor. That's concerning for me as an investor, and has to be kind of monitored.
Is it concerning for you as a trader, though? If you're looking at it from a shorter times perspective, what's your play here when you're looking at this divergence? Do you sit out? Do you sit on the sidelines? Do you get in? Do you short? What's your play?
Yeah, so I'm short a little bit right here. Just looking for a breakdown. My cover is very obvious, like we talked about. Any 5-day close above 30,500. It's a simple, easy, low risk trade because the risk is minimal here. It's only trading $200 below that level. So for me, I'm a risky trader. That's what I do for a living. For the retail crowd, I would say sit on the sidelines and watch to see if we get above that 30,500 level for those days. And then if you want to hop on board to 35, I think that's open to do.
If somebody were to say to you, Gareth, I think as a trader, I may want to just, because this range has been consolidating for quite a number of weeks to months, like you mentioned, I would want to wait to see momentum gain either on the downside or upside and consolidate in either of those directions before I'm more comfortable jumping in on a trade. How would you respond to that?
Yeah, I would have no problem with that. Being safer is always the better plan in the investing world. It's people that try to 10x their money overnight or in a month that usually end up losing it. So again, everyone should stay within their zone. There's nothing wrong with waiting for the next consolidation. In fact, you could argue that it's making bullish consolidation right now, which could be setting up for the next move up. Again, we have to see it get above that key level for that many days.
I'm just curious, extending not just for Bitcoin, but extending your analysis to anything, basically, because you are a swing trader. How do you apply swing trading to something that hasn't been swinging? It's just been flat.
Yeah, so a swing trader, you're right. You're in it for weeks or months, and you're not in it for the long term. You're not making trades that you're holding for over a year, which would be a long-term cap gain. And so basically what you're doing is you're analyzing sideways consolidation and seeing if it's bullish, and then does it start to break out and hopping on board. So that would be the way you would treat this trade on Bitcoin. The sideways consolidation is known as bullish consolidation. I'm skeptical of it because of its lack of performance with the NASDAQ. But again, if it does what I said it could do, then you do have a clear shot, or at least you should have a clear shot to 30,500 or 35,000.
35,000. Could you make the argument that the longer an asset consolidates, the bigger the next move will be, either on the downside or upside? Does that usually happen that way?
That is absolutely correct in terms of education. So think about like this. Think about, if you're a marathon runner and you just ran a marathon, which is what a big move would be, and you need to take a rest, right? You need to refuel. You need to rest your body. If you only get one day of rest and then they say, go run another marathon, it's kind of hard to do. But if you got a month off between, which is a lot of consolidation, a lot of sideways rest, you can run that next marathon and probably complete it really, really well. So great analysis there. Absolutely. And same thing on the downside. If it starts to break down, then chances are it's going to be a big breakdown.
Cool. So we'll wait for the next catalyst, but for now, more risk to the downside than the upside is your conclusion for Bitcoin. Yeah. And all right, well, let's move on to the stock markets because you did mention that they're somewhat related. Any downside risk to the stock markets besides the obvious, besides recession and economic downturn and
besides the 20 different risks out there that could be that the market's ignoring right now. Yeah. I mean, that's the kicker, right? Is that the market is in this zone. And I've seen this in past cycles. It usually occurs at the end of a cycle move where the markets kind of get in this euphoric sense. We saw it in 2021 where no one cared about any of the possibilities of the Fed hiking and the markets just went up until the Fed finally took it and started to hike. And then we saw that correction begin in the markets. And so we're in that same zone. I think risks that the markets are ignoring. You have China with Taiwan. There's been some kind of, some crazy comments coming out from both sides, the U.S. and China. But China just recently saying that the U.S. has turned Taiwan into a tinderbox by selling military equipment to them. Then you have obviously the comments from Biden, accusing Xi of being a dictator that didn't go over well, and some vice versa tit for tat in terms of trade stuff. So I think that's a factor that we have to keep an eye on. I think the bigger one for me is the macro data, right? The market wants weaker jobs numbers, but the key is the market wants just a little weaker jobs, just enough to make the Fed stop. If we slip down and we start going negative on jobs on a monthly basis, guess what we're going to start hearing? Oh my goodness, it's going to be a recession. A recession with inflation is called stagflation. And again, that is not what we want to see. That, in fact, would be an atrocious situation for the stock market and for investors. So there's a lot of risks out there. But if you look at the VIX remains relatively low, which means markets and investors are ignoring these risks.
I'm just reading this article from Morningstar. Stocks in the consumer cyclical and communication sectors did the worst in 2023, in the second quarter of 2023. So if you're looking at cyclicals, communications, well, cyclicals usually behave poorly during or right before recession. So it's not like the market is not... I'm going to go out on a limb and say that the market is not completely oblivious to recessionary signs. It's just that a lot of the tech stocks that we can talk about next are pushing up the index.
Yeah, absolutely. And that's the thing is if you actually, this is kind of crazy. If you take out the Magnificent Seven, as they're called, from the S&P, the S&P is barely positive on the year. Think about that, folks. We just had one of our biggest up moves in the first half in the NASDAQ and the S&P. And if you take 7 stocks out, we basically were flat to slightly positive for the first 6 months. So again, I think people have to recognize that as long as those stocks continue to carry, or if the other stocks begin to catch up, that's fine. But again, it's not a healthy market when you see 7 stocks controlling a majority of the gains. And I will say this, you'll have a lot of people talking about, and I want to show this chart, David, because it's really important. So a lot of people out there will tell you, oh, the markets are in a new bull market, right? Well, I would counter that with this chart here. And this is the NASDAQ composite. And if we look at the NASDAQ, right, the NASDAQ from the all-time highs has fallen 37 and change percent from the high to the low, and we've rallied back 37%. All right, so you say to yourself, okay, wow, that's pretty impressive. That's a great rally. It must be a new bull market. But then what you do is you flip over to the weekly, and let's just go back to the last time tech led this rally, tech led the market, and that would be in the dot-com era, right? So let's take a look at that chart and see exactly what the market did there. And what we can see here, and I'll just try to zoom in a little bit more for you guys, is that you had the same replication. The market, the NASDAQ fell 40%, and it rallied back 40% before dumping out and heading back down. Okay, so then you say, okay, well, that's the NASDAQ. Well, take a look at this. This is the Dow Jones Industrial Average going back to the 1930 depression, right? The stock market back then, the Dow Jones, we didn't have a NASDAQ back then, so we have to go to this chart. It fell 49% and rallied back 51% before dumping. And so my reasoning for this and why I wanted to bring this up is to show people that it doesn't necessarily mean it's all roses and that the market can go up. In fact, if you look at some of the biggest cycles historically in the market, you get these incredible rallies equal to what the market has fallen to the back to the upside before the next leg down.
Would there be anything that could change your mind and make you go long the markets?
Yeah, no doubt about it. So if we got some sort of situation where the Fed was able to land this economy softly and we saw GDP stay up and inflation come down, then yes, that would be a change of pace for me in this situation. But the probabilities of the Fed landing this plane safely are probably about 1 or 2%. It is not. I mean, think about this. First of all, the Fed has never been correct on anything they've ever done. They either loosen too much or they tighten too much. They call things transitory when it obviously wasn't. And so the history of the Fed is bad. And then you have so many moving parts of inflation. How's that affecting the consumer? How's the economy doing with all these rate hikes? We've gone up. What is it? 1,700% on interest rates off of the lows. That is the biggest vertical move percentage wise we have ever seen in interest rates. Yet somehow we're going to land this economy just perfectly. I just do not buy it.
I'm just thinking of a soft landing would actually be a bearish scenario. Think about it. I mean, the Fed no longer needs QE. They no longer need to increase the money supply, and they're no longer urgent to cut rates after that. And the market's thinking, oh boy, no more free money if the economy's doing well.
Well, I think as long as the economy does well with interest rates here, I think that's fine, right? Then everything's fine. But I think the kicker is that what happens when the economy eventually goes into a recession if inflation is still elevated? How does the Fed cut rates and increase the money flow when you have elevated inflation? And I think that's where you get this stagflation scenario where the Fed is handcuffed and they can't come to the rescue of the markets.
All right. I like Tesla. I like their cars, not their stock. I haven't done any analysis on the stock. But let's talk about the stock you have. Show us some technicals first, and then we can talk about some interesting things you've been analyzing on their fundamentals.
Yeah, Tesla's had quite the run today. It's flat to positive, up a little bit. I think about $2.50 on the day. It's had an enormous rally off of the lows here, right? One of the things I like to show here is that if we look at a measured move, right? So we take the lowest point down here and we drag up a line. We got about a 112-point move from peak to trough, right? Maybe 113. And if we do that same sort of move here off of the lows, look at this. We get basically 120. So to me, this is a measured move that's kind of topped out at this point, where you're basically in equal velocity moves following the consolidation. And I think, to me, you're also looking at a technical resistance point right in here. If you look right at this area, I know it's hard to see with my lines, but we're really hammering on some big resistance right here around 280 on Tesla. So for me, the technicals are telling me that there's a likely pullback. The RSI weekly has gone astronomically higher. It's also due for a correction as well.
Could it be possible that the rest of the markets bring up Tesla, or is it the other way around? Or is it some of these stocks like Tesla, like the other FANG stocks, are bringing up the index? Which is it, chicken or an egg problem?
Yeah, I think it's these FANG stocks, these Magnificent Seven that have been carrying the load. And I will say this on Tesla, right? There's some risks out there that I am absolutely floored that the market has not factored in, let alone our supposed politicians that are probably more focused on crypto than on what they should be. Yeah, so I just want to say this and give me some latitude to explain this. But in the latest deliveries numbers, which Tesla beat, they delivered more than half of those vehicles were delivered to buyers in China. All right. So again, now basically think about what's happening now. Tesla sells more vehicles to Chinese or the Chinese government, whoever's buying them, than they do anywhere else in the world. So six vehicles out of every 10. That means that if China shut down Tesla from selling vehicles, you would assume Tesla's stock would drop by 50 to 60%. That would cost Elon Musk over 30% of his net worth if Tesla stock dropped that much. And so I would draw this parallel to a national security risk and saying that what's to stop China from going to Elon and saying, hey, Elon, you better make sure that Twitter treats China in a better light. The algorithms need to be adjusted to give China a better favoring on Twitter, or we might shut you down. So basically, he has 30% of his net worth at risk. That's an awful lot of power that the Chinese carry over Tesla right now and over Elon Musk. So I would just bring that point up. I hope someone kind of heeds that warning out there and kind of looks at this a little closer. Doesn't mean he's going to comply with it, but it's just, again, it's a national security risk that needs to be evaluated.
Wait, how is it a national security risk to the U.S.? You mean?
Oh, yeah.
What's that risk for the U.S. here?
Well, the risk for the U.S., right, is that if Twitter is used in the U.S. by mass amounts of people. What if China does invade in Taiwan or is looking to invade, but the algorithms are constantly only favoring things that say positive things about China? So the investing public or the Twitter public starts to favor China more. So it's the same kind of thing. I mean, imagine if in the US, Russian propaganda was on Twitter and it was being favored and everyone was viewing that. That's the national security risk where it could be used as a backdoor to invasion where the US population wouldn't be as negative on it.
I hear your point. I'm just going to throw this out there. China can ban YouTube and Google and Facebook and social media companies because the workers involved in creating these products are mostly domiciled in the U.S. and outside China. China is very much integrated with Tesla. They've got gigafactories near Shanghai. They've employed a lot of workers. So to shut down Tesla or to kick them out would be to hurt themselves a little bit. Well, not they'll be fine without a gigafactory. But I'm just saying they're laying off domestic workers and
yeah. I mean, there's no doubt that there would be some cost to China, but again, in the scheme of China's whole entire economy, that would be like a pinprick. Versus imagine Tesla, what would the stock market in the US do? And what would things happen if they banned Tesla vehicles or from being sold, right? I mean, just alone, the market cap drop on Tesla would take the NASDAQ down 5% probably.
I think your bigger concern for the stock, at least, is that Chinese demand falls one way or another. Either they get kicked out or something happens. They don't really need to get kicked out for that, Gareth. I mean, think about it. The Chinese companies in China making EVs are already making headways. I mean, who's to stop a Chinese company from copying Tesla and copying their tech and making a better company or an equal company just with a lower price? And that's traditionally how they've done things with their tech companies. And so all that needs to happen
is absolutely happening, David, absolutely happening. And it's, by the way, the demand in the US for vehicles now, I just read the other day that Toyota delivered over 50,000 in 1 month electric vehicles to people here in the US. So the competition is only going to get tougher for Tesla on a company basis as well. So again, it just makes it hard for me as an investor to think about being long Tesla when the competition is coming on so strong.
You're absolutely right. And the edge, because I love cars, I look into this stuff myself, the edge that Tesla gained on their competitors, their German rivals, for example, the luxury automakers, that edge has already been narrowed. And in fact, Audi, Mercedes, they have electric vehicles that perform just as well, except they're nicer. So if you have the money, why would you buy, the argument here is why would you buy a Tesla if you could buy something nicer with equal performance? But yeah, I understand your concern. I'll throw one more thing out at you though. Tesla doesn't just make cars. They've got this robot line, Optimus, and in fact, Elon Musk has stated on record that he believes that the Optimus will be more significant than their car division in a few years. I'm paraphrasing, but that's what he said. I don't know. What do you think about this?
I think again, at this stage, looking at the revenue, I think 99.9% of their revenue comes from cars. So that's a major part. They do have the charging stations, which is going to be helpful, but it's not going to be massive. So I think that, again, just like NVIDIA is probably overpriced on the hype of AI and what it can do in the near term here, my guess is Tesla is the same thing. It's not to say in 5 years or 10 years, Tesla can't have revolutionized other aspects of the technology market.
Yeah. All right. Fair enough. Well, let's stay tuned and we'll follow up on Tesla. Before we go, give us one stock that you do like. We've talked about some things that you don't like for fundamental and technical reasons. What's something that you do think has potential?
Yeah, so for me, it's much more looking at these names that have been beaten down. So let me just show some charts here, guys, so you guys can get a sense. There are some stocks that I do like. For instance, 3M here, take a look at this chart. Beaten down from the highs going back to 2021. It's not going away. Even if in a bad recession, they're probably still going to do reasonably well. If we look at a larger time frame, you're now trading back to levels we've seen. We haven't seen these levels since 2007 and 2011. So again, it's not to say that it's a no-brainer, but in terms of would I rather buy something on sale that's a good quality company or something that's in the stratosphere, I'll take that on sale every time. Same thing with something like a Pfizer. Pfizer to me isn't quite at that point yet, but if it gets down a little bit lower, you get to kind of this $34 level, there's a lot of technical support there. And again, you're now talking about where it was trading in 2015. So again, these are defensive names for me. It kind of positions it just in case we start to see the markets deteriorate, where you can also be long, get a good dividend, but at the same time, kind of be protected a little bit.
And final question before we go. Exit strategies. Let's revisit this one more time for the viewers, because a lot of people want to know. If you've got a winning position, at what point do you say, all right, my 10% is enough, my 15% is enough? How do you exit a winning position?
Well, there's two ways. Number one, you look for resistance on the chart. So if something's coming up and slamming into a $30,000 level, like on Bitcoin, and you've ridden it since 15,007, you at least should take some off the table. The other option is what you do is you just set sell orders every 2-3%, right? So you sell 1/10 here. And the idea being is that it's just always smart to pocket a little bit, because money in your pocket is more valuable than risk money in the market. And so as long as you're taking a little bit off, nothing wrong with letting some ride, but always look to be taking a profit.
Same question, except for the downside. If you've got a losing position, you've essentially got three options here. You can do nothing. You could, I guess, DCA and add more, or you could cut your losses and sell. How do you make that call?
Yeah, so the key is having a thesis, right? So every time anyone buys a stock or a cryptocurrency or even a commodity, what is your thesis? Imagine you were in front of David and I on a panel, and you had to defend that thesis. As long as you have a firm thesis and that thesis is still intact, then I think you can stay long the position. If at any point, so it could be down 1%, it could be down 10%, it could be down 15%. At that point, if it is invalidated, if you imagine going in front of us and we said, no, that's not even true anymore, then that tells you need to get out. So it's being honest with yourself.
Excellent. And where can we follow your work? I mean, you're expanding your own businesses a lot. Congratulations. So the question of where to follow you is getting more complicated by the day, which is a good problem to have. Right?
Yeah, and now I'm on Threads for some reason too. Don't even ask me. But but bottom line here, folks, verifiedinvesting.com. You'll find me on there. Lots of amazing education, as well as a crypto service, and then still at inthemoneystocks.com for stocks and commodities. But again, like David said, we're expanding verified investing out very, very quickly. Lots of new exciting things to come.
Excellent. All right. Check him out on Twitter as well. Thank you very much, Gareth, for your time, and enjoy the rest of your vacation or holidays, and we'll speak to you again next time.
Thanks so much, David. Take care.
All right, take care.